What is that time of the show where we like to turn our attention now to the grain markets? This week we had a chance to catch up with author and analyst Elaine Kub. Here's our conversation from Wednesday afternoon. Well, let's talk about these markets. Corn, soybeans, wheat. We've got some storylines developing in all three of those markets. But big picture, what are you seeing here as we almost get ready to round out the month of January?
I see them being, kind of magically calm. When you think of this time of year, this should be the time of year when you see volatility from South American weather. And we do on a day-to-day basis, we do see that's what's driving corn and soybeans particularly. However, on a longer term, we really haven't changed the price level of corn or soybeans or even wheat since the beginning of the year. We had some reaction to a rather bullish USDA report a couple of weeks ago, but nothing that's changed the momentum or added any real directional momentum to these markets or made them trade out of already tested trading ranges. So I think it's kind of suspiciously calm, and it makes me wonder, what's coming down the pipeline in February or beyond that might actually add some direction to them.
Yeah, no kidding about that. I want to ask you about South American weather here in a second, but is there a storyline worth following right now that's impacting the wheat market?
The season is just, how much you can get shipped out the door exports wise. But other than that, you look at all of the northern hemisphere wheat growing areas and their expectations for how much fertilizer or yield might be perspective in 2023. It's almost exactly like we had about 11 months ago when the Russian war in Ukraine started. These are the same stories that we worry about now, is what the Black Sea region can do for planted acreage in a war scenario where about 22% of their wheat fields in Ukraine are now behind the front line. That will change, what will happen in their 2023 production.
Yep. All right, I promised we'd go back to South American weather. Let's do so here. What are you tracking down there? What are you seeing for some storylines developing?
Well, it's a record large crop in Brazil. So on that sense, in 6 months or so, the world will have more soybeans and a less tight soybean scenario than we're experiencing right now for folks that are buying soybeans in the global market. However, on the day-to-day basis, as I mentioned, the weather forecasts that drive prices, it's based on the drought in Argentina, which is slowing down the planting progress, and for their corn also. So that's really where the bullishness would come from on any day-to-day basis, is the dry weather that's in the lingering La Nina from Argentina versus that record large crop coming out of Brazil.
You mentioned we're kind of stuck in this pattern. It's been a bit of a quiet January. Maybe you're hinting at we might see something bigger happen for the month of February. Is your sense that prices are more so likely to go down than up at this point, or what are you thinking, Elaine?
I think when you think about setting prices for the 2023 crop, when we talk about what might happen for that crop, I think you have to be leaning towards them coming back down eventually. The commodity markets are always going to move back down toward the cost of production. But in the near term, the old crop grain markets, I think there is potential for some bullish movement as we get, the Chinese consumers coming back to work and back home after their Lunar New Year holiday. We might see a boost in consumption in China and elsewhere in Asia and globally, and a confirmation that we're not experiencing a recession globally, or that we might be able to come out of these inflation concerns in a positive way. I believe there's chances for oil, for instance, to start coming up. And if that starts moving up, you get a lot of other commodity markets following that higher, certainly including ethanol, biofuels, and corn and soybeans and wheat, anything that a grocery consumer will go to the grocery store and still be paying for despite these inflated prices.
Mm-hmm. Well, Elaine, is it ever too early to talk about acreage for what's going to come this spring? And if not, I guess tell me some of your thoughts around that. I know you've been looking at different prices when it comes to natural gas and fertilizer.
Yeah, I mean, the official battle for acreage sort of happens in February when the crop insurance reference prices are set. But the University of Nebraska, for instance, Glennis McClure has already come out with the crop budgets that they anticipate for 2023. Looking at fertilizer prices as they are now, that's the tricky part. Is you're certainly going to favor soybeans or any crop that doesn't require a lot of fertilizer from a planted acreage perspective if you're using fertilizer prices that we saw last fall or even right now. But if you have an expectation that fertilizer prices might continue to come back down, to diminish, to slacken, because we've seen a mild winter in Europe and natural gas prices are notoriously volatile, if that can come back down, then corn is right there in that mix too. And so at this point, sure, it's a little too early to tell, but if you had to guess one way or the other, I'd guess a 50-50 split between corn and soybeans, or just a natural pattern that we see from year to year.
Yeah, that's a story we'll definitely be following closely over the next month or so. Elaine, at this point, we're closer to February 1st than we are January 1st, which is typically the time people like to make New Year's resolutions. As we entered into this new year, you had the chance to sit down and write some thoughts about New Year's resolutions when it comes to grain marketing. What advice do you want to share with those marketing grain and perhaps some areas they can improve on?
Yeah, I mean, it's like making any New Year's resolution. You can't be vague. You have to be specific or be measurable. So the one tricky thing that I know folks sometimes like to do is you put a price target. You want to say, I want to sell corn at $7, for instance. But if you make it that specific, that measurable, it may never come to pass. We talked about the new crop markets may be biased towards moving back down toward the cost of production, and we may never see the highs from last summer again. So in my mind, the specific things that you can do, that you can control, is to have a schedule, say that you want to have 20% sold by a certain date or 30% sold by a certain date. That gives you some accountability to keep things moving through the year, but not to pin your heart on something that may never come to pass.
Yeah, some good advice there, Elaine. Before I let you go, applying that advice to where we're at now, what do you want to leave our viewers with? Any risk management advice or final thoughts?
Well, in a relatively quiet market scenario, I don't think there's a lot of action that folks need to be taking immediately right now. I think particularly those who are still owning old crop grain have an opportunity to kind of wait and see what the rest of the commodity market or the outside markets do. Maybe they'll give you a little boost right now. But be thinking longer term down the line for the next couple of months. This is definitely the season to be making new crop hedging sales.
Author and analyst Elaine Kub, our guest this week. Elaine, thanks for the time.
Thank you.